Some businesses look suspicious to SARS, not because the owner is intentionally dishonest, but because the admin is a mess. That is what many business owners do not realize. You can be serving clients, paying suppliers, keeping staff employed, and still end up with records that make SARS uncomfortable. Quick transparency note before we continue. I am Sia's digital twin, here to explain tax and business topics simply. The real Sia prepared the technical parts of this script, while he is busy helping clients in the practice. Most small business owners are focused on sales and operations. They are thinking about customers, staff, cash flow, quotes, deliveries, and keeping the business alive. SARS compliance often becomes something they deal with only when a deadline arrives, or worse, when SARS sends a notice. But SARS does not only look at whether you submitted something. SARS also looks at whether the story your numbers tell makes sense. And if that story looks messy, inconsistent, or incomplete, SARS may start asking uncomfortable questions. So let us look at 5 common mistakes that can make your business look suspicious, even when you are not trying to hide anything. Mistake number 1 is mixing business and personal expenses without clear explanations. The owner buys groceries using the company card, then school fees go from the business account, then petrol, then a random transfer marked simply as owner. At the time, it feels harmless. After all, it is your company, right? But here is the danger. When personal and business spending are mixed, your records stop telling a clean story. Was that payment a salary? Was it a loan account drawing? Was it a director expense? Was it private spending accidentally paid by the business? If your accountant has to guess the answer 6 months later, the records are already weak. Mistake number 2 is registering for VAT or PAYE, then ignoring the ongoing returns. The business registers for VAT or PAYE because it started employing people. But after registration, the owner treats it like a once-off admin task. It is not. Once you are registered, the ongoing returns matter. VAT vendors have record-keeping duties. Employers also have employer declaration obligations for PAYE, UIF, and SDL where applicable. So if you register, but then forget the monthly or bi-monthly compliance, SARS does not just see a busy entrepreneur. SARS sees a registered taxpayer with missing returns. If you're watching this and thinking, I'm not actually sure which tax types my company is registered for, that is your warning sign. Before the problem gets bigger, schedule a free consultation with us. We can help you look at your SARS profile, your bookkeeping, your registered tax types, and what needs to be cleaned up before SARS starts asking questions. Mistake number 3 is claiming expenses without proper proof. They know the expense was for business, so they assume that is enough. If you claim an expense, you should be able to support it with proper documents. That may include an invoice, a slip, proof of payment, and a clear business purpose. For VAT, this becomes even more important because tax invoices and proper records form part of the audit trail SARS can use to verify compliance. The risk is not only that SARS may disallow the expense. The bigger risk is that repeated weak claims make the business look careless. Mistake number 4 is filing nil returns while the business is clearly active. This is a major red flag. A nil return tells SARS that nothing happened for that period. No sales, no taxable activity, no payroll amounts, nothing to declare. But what if your bank account shows deposits? What if clients are paying you? What if invoices were issued? What if staff were paid? Sometimes this happens because the owner is rushing, sometimes the bookkeeper does not have the information, sometimes the business submits nil just to avoid being late, thinking it can fix things later. But that is dangerous. From SARS' point of view, the return you submitted is your declaration. If the declaration says nothing happened, but other evidence suggests the business was active, you have created a contradiction. And contradictions are exactly the kind of thing that can trigger questions. Mistake number 5 is not responding to SARS notices, verification requests, or audit letters. The owner sees it, feels overwhelmed, and leaves it for later. Eventually, SARS makes a decision based on what it has, or the matter escalates. Ignoring SARS does not make the problem disappear. If SARS asks for documents, respond properly, with the correct records, within the required timeframes. And if you do not understand the notice, get help early. The worst time to organize your documents is after SARS has already asked for them. SARS does not need to prove fraud before it starts asking uncomfortable questions. Sometimes all it needs is a pattern that does not make sense. Each one may look small on its own, but together they tell SARS that the business may not be in control of its records. And once SARS starts asking questions, you may find yourself dealing with verifications, audits, disputes, objections, penalties, interest, or payment arrangements. So do not wait until you need a dispute to clean your records. Check whether your bank statements, invoices, bookkeeping, VAT returns, PAYE returns, and income tax returns all tell one consistent story. And if you know things are messy, schedule a free consultation with us. We can help you understand where the risks are, what needs to be fixed, and how to get your business records into a cleaner, more defensible position. Because the goal is not just to submit returns. The goal is to make sure your business does not look suspicious when SARS starts connecting the dots.